economy has added jobs for 52 months in a row. That's an impressive streak of uninterrupted job growth. But one group may be finding it hard to feel optimistic because economists say that this is actually the worst job market for new college graduates since the height of the COVID-19 pandemic. Right now, the unemployment rate for those who have just finished college education is higher than the national average. LinkedIn estimates that hiring for entry-level positions is down 23% when compared to March 2020, when COVID lockdowns began in many U.S. states. So here to help us understand this phenomenon better is Matthew Martin. He's a senior U.S. economist at Oxford Economics. Great to have you this morning, sir. We talk a lot, especially in the financial community, the financial journalism community, about the strength, the resilience of the labor market these last few years. But clearly there's a disconnect with recent graduates. What's your research telling you about why?
Yeah, absolutely. And thank you for having me here today. Pleasure to be on the show. So our research, which is looking back to using data around 1980, takes a look at unemployment rates for recent college graduates versus the national unemployment rate. And for the most part, recent college grads usually tend to have a lower unemployment rate, specifically because of their higher educational attainment. Now, what we've seen over the last couple of years is that this isn't quite the case. And actually, the recent grad unemployment rate, which is for those aged 22 to 27 who have a bachelor's degree or higher, is actually above the national unemployment rate, which is really a break from historical trend. And what our research has shown is that, this is mainly in the tech sector. And so a lot of that just kind of goes back to after their post-pandemic surge of hiring in 2021, they're starting to normalize those rates. But there is some preliminary research that is pointing toward the fact that AI is starting to impact some of these roles, mainly because some of these jobs, that entry-level jobs that people are looking for, are predisposed to AI being able to displace them or at least take over some of the tasks and roles that they might have been doing in those companies.
So that sort of feeds into the suspicion that I think a lot of people have had, that AI, that technology would sort of come for some jobs. I'm curious what you make of those who push back and say those fears are overblown and that perhaps AI actually creates jobs too.
Yeah, I think that's, when we're thinking about AI over the longer term, I think the research has shown that it's likely to create more jobs than it's going to displace in the long term. I don't think that's a lot of, encouraging news for those who are looking at the job market right now, where they're really seeing the downside to AI, where it's, making current, workers at companies more productive, allowing them to subsume some of these tasks that, entry-level positions would have done. So I think at the moment we're at a bit of a timing effect. Mm-hmm. We have businesses who are slowing hiring in general due to an uncertain economic outlook, but they're also looking to reduce their overall headcounts and potentially reduce their costs of their staffing. And so I think what we're seeing at the moment is, these entry-level positions, which are a bit more playing to the strengths of AI, coding, data analysis, and analyzing documents, things that entry-level positions might have really been key for, cutting your, starting to learn a new role at a company, like obviously does a lot of, mm-hmm. entry-level positions do a lot of the grunt work. And sometimes this is what AI can really excel at the moment. So yeah. I think we're just seeing for these entry-level positions specifically, the downside to AI.
Yeah, and you bring up an interesting point, just sort of like the timing of all of this. I think anyone who has graduated during a time of financial upheaval, whether it's immediately after COVID-19, for me it was graduating not long after the great financial crisis, and can appreciate that it can sometimes take, maybe not in the case of COVID-19, but it can sometimes take years for the labor market to right size, for companies to start to feel comfortable hiring again. I'm curious, Matthew, what you think it'll take or how long it will take for the labor market to right size in this environment.
Yeah, absolutely. And I think what we would say at the moment is that it's likely, unfortunately, to get worse before it's likely to get better. As I mentioned before, businesses are really operating in a quite an uncertain period at the moment. So, going through expansion plans is likely to not be on the cards at the moment. So we're not likely to see, a large increase, particularly in this tech sector, of business demand. So until we start to see that turnaround, you're going to continue to have graduates. Computer science is still a large growing field of study. So you're going to continue to have a steady supply of workers into the labor market. I would say that 2026 and 2027 beyond, look like years where hiring should pick up. I think you'll also start to see college students move into fields that have more demand, One of the ones we highlighted is healthcare services. That's where there's a ton of job demand still. So I think you'll start to see, a natural shift away from the tech sector, and not as much of an emphasis on those degrees, because if there's not a job to do it, then likely those college students are going to enter those fields.
Yeah, I mean, if there's a silver lining at all, at least from my perspective, is that you sort of learn how to become adaptable when you graduate in an environment like this, sort of by necessity. Really important points, Matthew Martin. Thank you. Appreciate you being on with us from Oxford Economics.